So the title was not clickbait. I do not think that people really should buy 100 shares all at once. Now, they're different than accumulating shares over time, but if you were going to go out and maybe start the wheel or something like that, I do not think that you should just go out and buy 100 shares in this particular market that's volatile and things like that. The LEAPS option is just so much better. And that's right, it's LEAPS with an S. Don't be one of those jabronis at a party that's talking about LEAP options and wants to make the S pluralize. I don't know. People are crazy, guys. LEAPS, long-term equity anticipation securities. It's a part of the acronym. Drives me bananas. And also, I know every time I wear this shirt, the comment section goes crazy. Go blue, go blue. Guys, save your breath. This was a gift. I just wear it because it was free. I couldn't care less about colleges and college sports. So I have done a ton of videos on the poor man's covered call, which is essentially just a debit spread that includes a LEAPS option and a call against that. But I really haven't broke down the LEAPS in a while. And I've definitely learned a lot of things, especially from being inside my Discord where there's people in there that are a lot smarter than me. I first learned about the LEAPS option, I want to say like 8 to 10 months ago. I don't know exactly where I heard it. It was probably from Adam in the Money. That guy, he knows his stuff. And that's probably where I first started to get introduced to that, which evolved into the poor man's covered call. But the LEAPS option, I just want to show an example of one of my LEAPS that if I look right here, it has gone up, the share price, it's gone up 57.76 in the time that I've held that LEAPS. But the LEAPS value has gone up 133%. Now, yes, market conditions are ideal for a LEAPS option. There's going to be people that are like, good luck in the bear market. Like we can do the same and buy puts on the opposite side. It does not matter if we're going to be buying calls or buying puts. And yes, admittedly so, right now in early August in this market and in the last 6 months or so, LEAPS, it's been the time to sell LEAPS. We have to make our options trading according to the market conditions. Right now, buying calls for far out expiration on stocks that we think are going to steadily increase over time and then possibly sell calls against it is fantastic. So let's break down exactly what the LEAPS means, some things that I look for when I'm selling the LEAPS, and then like I said, I'll show you a couple examples inside my own portfolio. If you are curious of seeing my portfolio on a regular basis in real time, guys, inside my Discord, we talk about it. I show all my moves. And as well as I just started a new spin-off live stream channel, Brad Finn Live. I'm going to go on there very often and discuss the moves I make, as well as getting on there on Sundays and letting you know like the week in review, but also the moves and the things that I'm thinking about in the future. That's something I get requested a lot. Like, what are you thinking going into the week? So head over to Brad Finn Live. I'll leave a link down in the comments in the description. You can subscribe over there, hit the notification bell. And like I said, I'm going to be going live over there a ton. So here are like the particulars without getting really crazy, and then we'll talk about why I love them so much. When we say LEAPS, okay, we're talking in terms of expiration. Now, if you're new to options and you don't know strike prices, expirations, premiums, things like that, that's okay. I have a ton of videos, including a 1 hour and 44-minute video on options front to back. Maybe you want to go check that out and come back so this isn't so crazy to you. But when we talk about the LEAPS, we're talking about expiration. And that expiration is going to be more than a year out, preferably. You could be about a year. You could be more than a year. The farther out you can go, the better. Now, what does that allow? Well, it allows us more time to be right. It also allows for short-term capital gains if we hold this for more than a year and we profit off of this option. Now, what type of stocks am I going to be wanting to do this with? I'm going to be wanting to do this with stocks that I am confident are going to travel in a direction that is pretty steady and consistent, whether that's up or down. If we think it's going to go down over the course of a year at a pretty steady rate, then we are going to want to buy puts against it. Now, frankly, and on full disclosure, I've never bought a put. I never want to bet on a company going down, especially over the long term. We know that companies can take a correction, but over the long term, we know that they're generally going to go up. So I'm only going to be buying calls, and I do this with companies that I think are going to increase in value over a year or so. after we pick that stock we think is going to go up and we're far out in expiration, next is to choose our strike. And we are going to want to make that strike as far into the money as possible, all right? We want that thing deep in the money. And I know some people think that like deep in the money is a trademark term, guys. Many people use it. We are going to want to go deep in the money. Now, what do we mean by deep in the money? Well, the further away we go from the strike price, essentially more leverage we're going to have inside this option, and the lower our break even is going to be. When we are really, really close to the share price, we look at one of the Greeks called delta. And if you don't know that much about the Greeks, they're kind of like a cheat code. Like you don't really need to know them to trade options, but they definitely help. I made a video about that as well. You look at delta, the further down you go, the deeper in the money you go, the more delta increases. Now, what does delta mean in short? Well, the technical definition is it's the amount of money, premium, value of the option that is going to increase with a $1 change in the share price. So for example, if you have a delta of 9.93, that means every time the share price goes up $1, that the value of that option is going to go up $93. So if we look at a delta of say 1, right? Can't be greater than 1. If you have a delta of say 1, that means every time the share price goes up $1, you get $100. That would be the equivalent of owning 100 shares. So if I can have a delta of 0.93, I essentially have the equivalent of owning 93 shares. Every time the share price goes up $1, I get 93 instead of 100. Now you're like, okay, well, why wouldn't I want the 100? Well, because the value of the option and how much we are going to have to pay to get that leverage is a fraction of the cost of owning 100 shares. Let's take a look at one of my examples to show you what I mean there. One of my options is Vuzi, okay? And Vuzi just had a crappy earnings, I know, but that's okay. They pretty much bounced back. When I purchased my LEAPS option on Vuzi with an expiration of 2023, the current share price was $8.31. So if I wanted to purchase 100 shares of it, I would have had to pay $831. But I was able to purchase a LEAPS option with a delta of 0.92, pretty much 92 shares of that stock, and it only cost me $400. So I got 93% of 100 shares for half the price. That's the beauty of owning the LEAPS as opposed to just outright buying 100 shares. Essentially the same amount of leverage with a fraction of the price. And not only did I get that LEAPS option for a fraction of buying 100 shares, if we look at the time now, okay, so as of the time of this recording, Vuzi is trading for $13.11. So that is a $4.80 increase in the share price. So if I owned 100 shares, it would have went up $4.80. Now that would have been an incredible return of $57.76. But if we look at the value of my LEAPS option, that's gone up 132.5%, okay? More than double what the share price has done. Now, if we're looking at my Vuzi call, the numbers, guys, please look, I have 2 contracts, so that $800 cost was really $400. So I'm getting this double time. But guys, I paid $400 and it's up 132% as opposed to paying $831 and being up 57%, which would have been awesome. When I bought my Starbucks LEAPS, it was trading for $111.41, now $117.84, a $6.48 increase, 5.82, a great increase, but the LEAPS option is up 18.49%. So once again, that's triple the return of just buying the 100 shares. And those 100 shares would have cost me 11 grand to purchase. I have a Pepsi, which is the share price is up 4.08% since I purchased that LEAPS option, but the LEAPS is up 29%. This is an amazing opportunity, like I said, to get the leverage of close to 100 shares for a fraction of the price. Now, what are the cons? Because there's cons, and trust me, go through the comment section. The cons will be there. The LEAPS police will be in the comment section, I promise you. I will acknowledge those. Number one, what if the share price tanks? Yeah, well, you're going to lose money. If you own 100 shares and the share price tanks, or if you own the LEAPS and the share price tanks, you're going to lose money. Now, if it tanks, everyone's always worried about this tanks. If it tanks, yes, the option will expire worthless and you will lose the premium that you pay. Admitted. If the share price tanks and you own 100 shares, you still have those shares and you can wait for them to rebound. But people always fail to realize that once that expires worthless, right, and I lose that premium and the share price is tanked, what can I then do? Well, I can purchase another LEAPS option and ride the price right back up with the 100 shares that I would have had. Now, guys, full disclosure, in this situation, you have to look out for something called the wash rule. You can't take a capital gains loss and then buy something immediately later. So there would be some technicalities. You'd have to wait 31 days after expiration. Not that big of a deal, but I'm not afraid of the price tanking. If it tanks and I really feel strongly about the company, I'm just going to purchase another LEAPS and I'm going to ride that back up because I'm not going to be doing this with stocks that I think can tank that I don't want to hold. Right? I've done my research. If it tanks, something crazy happened, and I either, take my lumps, take the L, or I'm just going to do it again, and I'm going to ride it back up. And another thing, most likely, I would have been selling covered calls against it the entire time and knocking down my net premium. I think with this Vuzi call, I'm almost break even on that $400 that I paid for those particular options. So when that expires worthless, I'll be even. The other con that you have to think about is if you are a dividend investor. When you hold a LEAPS option, you do not get dividends, right? You own a contract, you don't own the shares. So I pretty much do this with stocks that don't pay dividends, right? So I'm going to wheel stocks that pay dividends, right? I'll have those 100 shares and I'll get the dividends when I own them and I won't when I don't own them. But for this, with Vuzi, Tattoo Chef, and other companies like that don't pay a huge dividend, I don't need to worry about the dividend in that particular case. Guys, I'm not telling you what to do, and I'm not saying like this is the most superior thing ever. I'm trying to give you a perspective to new things. If you're wheeling and you're getting ready to evolve into new things, this is something that works. Will it work in every market condition? The answer is no. So please don't come on and tell me about how in 14 years when we're in a bear market for the last 10 that this isn't going to work. Guys, this is right now. And this is something for you to go and do your own due diligence on so that you can start to evolve and make more money trading options. I'm going to keep trading them. I keep loving them. If you want to see what I'm trading, like I said, hop into the Discord or jump over to Brad Finn Live, my new spin-off live shoot channel. Until I catch you guys on the next one, stay positive, work really, really hard. Always, please, please be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.
Go blue.